Hey everyone, welcome to my YouTube channel which is explore yourselves, banking and general knowledge, etc. Today I am going to discuss about banking reform, the crossroads of privatization. Introduction. Banking reform has long been a central theme in the economic transformation of developing nations, especially where public sector banks dominate the financial landscape. As markets expand, technology reshapes services and competition intensifies. Policymakers are increasingly exploring strategies to strengthen the stability and efficiency of the banking system. Among these strategies, privatization has emerged as one of the most debated and influential ideas. It raises questions about efficiency, inclusion, governance, and public accountability, making it a subject of both optimism and caution. The following story presents an objective look at this theme, highlighting the potential advantages and concerns associated with privatizing banks, and how such reforms may shape the future of financial services. In a large and rapidly developing economy, the financial system found itself at a turning point. For years, public sector banks had carried the weight of national priorities, supporting agriculture, infrastructure, small industries, and social welfare schemes. These institutions had built trust among millions of people who preferred the safety of government backed banking. But over time, new challenges emerged. Rising competition from nimble private banks, the growing digital landscape, and the pressure of non performing assets pushed policymakers to re examine the existing structure. A key idea returned to the forefront, privatization as a tool for modernizing and strengthening the banking sector. Inside the financial circles, a quiet debate began. Supporters of privatization argued that the existing system, though stable, needed efficiency and sharper accountability. They believed private ownership would encourage faster decision making, professional management, and improved customer service. Public sector banks often operated with heavy administrative layers and slower approval chains. Privatization, they said, could remove these bottlenecks. However, critics had their concerns. Public sector banks had always prioritized national objectives over pure profit. They had branches in remote areas where private institutions rarely went. They offered financial services to vulnerable groups who were not always attractive to profit driven players. There was fear that after privatization, priority lending could shrink and essential services might become costlier for the common customer. Nevertheless, the leadership overseeing economic reforms announced that the system needed a sharper competitive edge to sustain long term growth. Technological upgrades, risk management reforms, capital infusion, and operational autonomy were demanded. Many believed privatization could unlock these improvements more rapidly than internal restructuring alone. Some positive aspects: greater efficiency. Private banks tended to adopt new technology faster, optimize costs, and streamline operations. Better customer experiences. With competition driving, innovations, products, services, and digital offerings could improve. Professional governance. Independent boards and merit based leadership could reduce external interferences. Healthier balance sheets. Fresh capital from investors could strengthen financial capacity and reduce the burden on taxpayers. Some negative aspects: reduced social banking. Profit driven operations might limit services to rural or low income groups. Job uncertainty. Restructuring often led to workforce anxiety regarding redeployment and role changes. Higher service charges. To maximize returns, private entities may increase fees or limit free services. Risk of market dominance. If not well regulated, a few large private banks could control too much of the financial ecosystem. The debate continued, and no sudden move was made. Experts emphasized that privatization, if undertaken, must be gradual and supported by strong regulation. Financial inclusion, customer protection, employee security, and regional development had to remain central pillars. Not all public sector banks needed privatization. Some could be strengthened through governance reforms, better technology, and stricter lending discipline. As the economy evolved, the story of banking reform became one of balance between efficiency and inclusiveness, between private innovation and public responsibility. The ultimate goal was clear: a stable, modern, and customer-centric banking system capable of supporting national growth. Whether privatization would be the main driver or just one element of a larger transformation remained the central question, shaping policy debates for years to come. Conclusion: banking privatization remains a complex and multi-layered reform, carrying both the promise of greater efficiency and the responsibility of safeguarding public interest. While private ownership can bring agility, innovations, and stronger financial discipline, it may also reduce the social orientations that public sector banks have upheld for decades. The true challenge lies in designing reforms that blend the strengths of both models, leveraging private sector efficiency without compromising accessibility, transparency, or national developmental priorities. Ultimately, the success of privatizations will depend on careful implementation, strong regulatory oversight, and a balanced approach that protects customers, employees, and the broader financial ecosystem. With thoughtful planning, banking reform can evolve into a more resilient, inclusive, and future ready system that supports long term economic growth. Disclaimer: this write up is purely informative in nature and does not represent a financial advice, policy guidance, or any official positions of any institutions. The perspectives on banking reform and privatizations are presented for general understanding only. Actual outcomes may vary based on government decisions, regulatory frameworks, and economic conditions. Readers are advised to refer to official notifications, professional consultations, or authorized sources before making any conclusions or decisions related to banking policy or reforms. Thank you very much for your patience. Request for like, subscribe, and share.